Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
So where are we? I mean, it feels pretty similar to last week, although I would say that the crypto moves feel like they've settled a bit. Bitcoin at 111 plus feels like it's not hunting for a new local bottom at this moment, maybe a little sturdier. Yeah. But everything else feels pretty much the same week over week. Is that your read?
Yeah, everything kind of feels like the same in general. I think that's a function of, relatively easy monetary policy softening data, and that's generally supportive of risk assets. And there really isn't like a catalyst for us to kind of go lower. There are some positioning dynamics that are a little concerning and some seasonality factors that are a little bit concerning. So, CTAs are in 90 plus percentile of net buying, net longs. Risk parity funds are also very long. Gross exposures, for long short hedge funds are, in the 90th percentile. You've had, 16 of the last 18 weeks of like strong retail buying. And so, there's a little bit of concern around people are just very long
just
right now.
Fatigue or too extended or
it's very extended. That's not to say you can't get more extended.
I love it when you say that. You're like, it's might be overbought. Not saying can't get more overbought.
Correct. But we've been rallying for the better part of like 4 or 5 months.
Yeah.
And it's been kind of like a one-way street. And and markets, can trend like that for a really long time. I just think that, when you're in this type of market, it kind of makes sense to own some hedges, right? Just because like vol tends to be a bit lower, when you're in like a up only grind higher type of mode. And so
hedging can be cheaper too.
Yeah, correct. Yeah. And so I think it's prudent to have like some hedges on, particularly in things like Bitcoin where like vols are in like the mid 30s. Which is like historically like super low. But there's not really like a catalyst you can point to being like, oh, we're going to go a lot lower. The one area of concern, that's pretty notable for this week is obviously the employment data. So we've got non-farm payrolls on Friday, in addition to the ADP employment report, which comes out tomorrow morning at 8:15. And the setup here right now is, you've got a ton of cuts baked into the market. September is like 24 bips priced. And, by December of this year, you're pricing in 56 basis points.
So we're looking
at 2 to
half
3
a percentage cut potentially by the end of the year.
2 to 3, like,
another 50. Yeah. So,
yeah. So, like, I think that pricing can go a little bit closer to like a full blown 3 by the December meeting. And that's totally possible. But at the same time, like the economy is doing just fine. Like there is weakness in the labor market, but, growth is doing fine and there's still upward price pressures.
Yeah.
And so, right here, right now, like given this rate pricing and given the dynamics in the economy, the market is kind of signaling that this might be a little bit of a policy error. And
to do the cuts,
yeah, or this aggressively, quickly, without knowing the data. And the chart that I point to is just gold.
I was just going to bring this up.
Fresh all-time highs.
Really, I mean, not so much in like Bitcoin or crypto terms, but mooning. I mean, actually, like big, giant green candles.
Correct. Yeah. Correct. And especially, it's more impressive given how much bigger it is.
That's what I'm saying. Yeah, it moves, moves a couple $100. You're talking about like
the world's largest asset.
Yeah, it is. It's the world's. It's larger than the top stock, the top 5 stocks combined.
Yeah. And so it's really impressive to see, a rally like this. But I think it's just more like investors have just like lost kind of, their appetite for a lot of other assets per se, because, okay, do you really want to own long run bonds in the G10 world? Like, no, because we just keep issuing like a ton more and inflation is still an issue. And like, if you're cutting rates, like inflation is probably going to be a bigger issue, not a smaller one. And then there's like a sentiment like against the dollar. You kind of want to de-dollarize a little bit. And if you look at places like, Japan, they're considering, raising rates. And that's why you're seeing, Japanese back end yields like literally moon, like Japanese 30s are at 330, which is kind of like
people just dumping them.
And like, the 30-year in the UK is like close to like 5.7%.
I mean, the U.S. 30s was going higher too.
Today you had a little bit of a rally, but you're approaching 5% again.
Yeah.
And a lot of that's driven by the fact that we're just issuing so much. Like this week alone, like you're talking about like over $100 billion of like net drain from the market in terms of like net new issuance. So every week like that proceeds, at least for the better part of September, like you're net draining money from the system, and like buyers of those bonds have to like come from somewhere.
Yeah.
And it's not just like it's not just sovereign issuance, but it's also corporate issuance. Like there's a ton of corporates that are issuing debt with investment grade credit spreads like at super historically low levels. And so you have a world that's like flooded with debt, and like if folks don't view that as a store of value, like the next best alternative that's big and scalable might be gold.
Yeah.
And so it's definitely having a moment in the sun right now. It's glistening.
It is. It's glistening well. And digital gold is it's still, people were very bearish over the last several weeks. August was a tough month for Bitcoin. I mean, it looked down only for 3 weeks. Not huge down, but it looks sturdier now. I mean, I wonder, like, what do you think turns it around and takes us to new all-time highs in Bitcoin this year? Is it just time? You know how sometimes the market just has to, like, work through its stuff, and if it can't go down further, then sometimes it just goes up more because it's got to do something?
If it can't go down, it'll go up.
So sometimes it doesn't. I don't think it needs, like, a catalyst. I think.
I mean,
what do you think?
Here's the thing. There's just so much, like, optimism baked in already. Like, it's an approved ETF asset class. People can hold spot now. There's so many different ways to access Bitcoin liquidity. Like, the administration's super involved, super friendly in terms of, regulating it, endorsing
So
it.
you're sort of like, what more can possibly happen?
Like, there's just so much
just
good
more
stuff.
people have to buy it. Like
more people have to buy. And, like, and a lot of the upward price appreciation has been driven by these digital asset trusts. And, MNAVs have been moving a lot lower.
Yeah.
Right? Like everywhere from like Metaplanet to Bitmine to, SBET, like, you name it, like the MNAVs have been compressing. And so that in theory should mean that there's less buy pressure on the underlying asset. But again, like you're like, 2-3% higher in the S&P away from those MNAVs being higher again,
right,
probably.
It's true. Yeah. So, and then they can issue again and do the flywheel more.
Exactly.
It is quite interesting that that's all it might take.
That's all.
But I agree. I mean, I think ETH had a little bit of a catch-up trade generally, but also has had ferocious ETF buying and Tom Lee buying.
Yeah.
Truly shockingly large amounts, actually. I mean, ETH outpaced Bitcoin ETF inflows for like 6 weeks in a row.
Yeah.
And ETH is, 1/5 the size of Bitcoin. So to even be, it would be at sort of market cap parity if the flows were 1/5 of Bitcoin.
Yeah.
To be more than shows true outsized performance. But like it took that to rally it to 4,900.
Yeah. And then on top of that, like the amount of leverage that piled on, trying to take advantage of the fact that they knew there was this big buyer in the market, it's immense.
Yeah.
Right. So there's a ton of like ETH leverage in the system. But yeah, what I'll say is, and this is like an interesting note, lesson from, George Soros, but he always, talks about this concept of reflexivity, right? And like the DATs are the perfect example of reflexivity because, okay, like, you issue a DAT and you purchase the underlying asset goes up, people view you as a clean way to express that. And, it starts going up in value, your MNAV increases and you buy more spot. And so there's that virtuous cycle that leads to, more price appreciation in the underlying asset. But then, you also have to think that there is reflexivity to the downside. Like there's a ton of leverage in the system. There's a ton of situations where like you are not going to have that buying. Like the moment the MNAVs go to zero or parity or like negative, like that in theory is like downward pressure. And it's like, oh, okay, so these big buyers in the market are no longer there. What are all these speculators going to do? Right. And so, what you have to be cognizant of is just like that moment where that reflexivity goes in the other direction because, it works both ways.
Yeah.
Obviously, your risk, to the upside is infinite, and to the downside is finite. You can only lose what you put in.
Right.
And so, the distribution isn't necessarily as fair,
Yeah.
or as even, sorry.
Right.
But like markets are reflexive in both directions.
They are. I think that's a good point to leave it on with our friend Beimnet Abebe from Galaxy Trading. Thank you so much.
Thank you, sir.